Welcome, Tamara, a special session, March 15th, 2025. How are you?
I'm doing great today. How are you?
Good, thank you. Welcome back. I heard you quit your job. Congratulations. Exciting.
Very.
I was telling you with Garrett Investments, you can open an account under Garrett Investments, whether it's with Schwab or Robothood. I did it with Schwab, and then you have a second account for trading. You can make one account maybe for high profile trading, one account for maybe investment, take investment money, for example. Sounds like you can do a DBA easily, or you can also do a corporation, or you can do both. Have different accounts. Do you have an IRA, by the way?
I,
What I
that's
do,
how I started. That's how I started when I was learning from you in the beginning. I was working my Roth with it.
when I did IRA, I do low risk trades
Hmm.
because like the IRA, I think of that as like sacred money. I don't want to put that at risk. Like for a trading account, I'll do more high risk trades. Like I'll do like trading like buy low, sell high, cover calls. On the um, on the IRA, I generally do like dividends and long term share growth.
Hmm.
I'll do a cover call, but like I really want to like bite my hand, and in the sense that I don't just do any trade on my IRA because I don't want to risk. I don't want it to be a drawdown. You know what I mean?
Hmm.
Because if you're vetting these stocks we're doing, if we have a core 10 stocks list, by the way, you have your core 10 stocks list,
Oh, who?
a core 10 stocks list. Did you pick your 10
Yes,
stocks?
I did.
Let's discuss those today because if you vet those stocks, those are great stocks. They're doing good over time. What?
Hmm.
Something going to go up.
Okay.
The way they get dividends or share growth, you get that benefit over time like this. It's just going to go up like, and you don't really have to put them at risk. You want to have less risk, and then you're getting the benefit of good stocks going up over time. That's going to give you your return, ideally. And with your trading account, you can do more risky trades like cover calls, buy, sell, right?
Hmm.
Okay, makes sense. Okay, do you have any questions for me today?
Uh, well, I figured it out. But my question was the naming of the straddle and the strangle and the other name. So I found out that the way that they name it is a little different than what I see people explaining it. So that was one of the things. It's a difference when what you name it, if you're doing secured covered calls or unsecured cover calls. It's a different name. So they call it option trading. Option, it's a different option tier when you're doing secured. And they call it the strangle and straddle when you have unsecured, when you just, buying and
Okay, can
selling.
you do unsecured at Robinhood?
Unsecured, yes. I can do unsecured and secured in Robinhood.
Can you sell naked calls and naked puts on Robinhood?
I can.
Okay, great, because that's really the classic strangle, which I want to talk about today. I can actually get into it right away.
Hmm.
Um,
But the
let's do
classic,
the.
the classic cannot be bought on Robinhood. So the classic, which means that buying the same uh, strike price for the put and the call, it you can't do it on Robinhood.
So that's one reason you want to go to Schwab is because
Right.
they can definitely. I wonder why they don't let you do that at Robinhood. You know,
I
what I
don't know.
think. You know how at Robinhood they control the meme stocks. They turned off the app when they were shorting the meme stocks, and they started going up, so the big money started losing money, and they turned off the app. Did you hear that story?
Yes, I was in a trade when they did it.
I feel like they're trying to control you with the Robinhood. They get
Right.
enough new people and they get enough flashy business advertising, get a lot of new accounts with a new generation of investors, and they kind of don't give you all the things that let's say Schwab gives you. So
Hmm.
that way they can kind of control the people better, and they can get so that way when they short a big stock and you want to buy it, they won't let you. So they turn off your app. You see what I'm saying? Because
Correct.
at Schwab, they never turned the Schwab app off. At Schwab, we could short those stocks via GameStop and AMC theaters, for example.
Mm-hmm.
That's another reason why I go with a Schwab. But you're at Robinhood now, so we'll do it.
And
We'll deal
so
with it. But
now, since I've grown the account a little bit, I'm transitioning into Schwab now for next month.
okay, good. Now, try. You said you can't do the same strike. See if you can do a different strike because the Strangle I want to show you. By the way, the classic straddle is what you mentioned, which is the same strike, which means you have IONQ behind me. The
Mm-hmm.
stock is 25. You can sell the 25 call, 25 put. Okay, that's the same. But problem with that is it doesn't give you any buffer. One will get assigned. Okay, unless the stock is exactly 25 and neither option's in the money, there'll be an assignment. So the stock would have to be exactly at 25, not higher, not lower, to not get an assignment, which is unlikely.
Right.
So, but at 25 you get the most premium. Let me give you an example. So let's just do the straddle and the strangle, okay? So what you do is you sell one, let's say sell one naked call.
Mm-hmm.
So IONQ, okay? Stock is 25 even. That's nice. Exactly 25. We're just talking about that. Stock is 25. So it was up Friday, up 363, which is great. So it's coming back. Now, what you do, you know how you sell a put?
Mm-hmm.
You know how you sell a cover call?
Mm-hmm.
But this time you don't have the shares, okay? If you have the shares, you can put that separate trade. But this is a separate trade where you just sell the call. So one call, 25. Let's go April, 33 days out, 33 days out. The 25 strike, let me see if you can see it here. Yeah, is the puts paying 345, 345 by 355. And then the call is paying 350 by 370. So this one you want to do a Schwab. But let's see if in Robinhood you can do a Strangle, which is you sell a lower put and a higher call, not the same one,
Right.
but on the same date and on the same stock. Okay.
Right.
Let's do the classic. Let's do this classic straddle first. Okay. So you sell the naked call, put -1 call for 25 strikes. So if it's 350 by 370, what could be a limit between those two?
You said 350 and 370?
Yeah, the 25 strike for IONQ for April. You want to pull it up? Can you pull it up?
I will have to. I'm on my phone today.
You know what? Another thing. You don't have this at Robinhood, do you? See this?
Mm-hmm.
They show you the calls and the puts,
It does.
and then the strikes in the middle.
Right. That's how it does.
Oh, it shows you like this?
Yes.
Okay. So you sell the 25 call, and if it's 350 by 370 limit bid ask,
Mm-hmm.
what could be a limit between those two?
Um, I would
360,
I would
360 is
go
right in
and
the middle.
divide by two. So I'll do it divide by two. So
360 is right in the middle. That's the one you want. 360.
yeah.
Now the 25 put is 345 by 355. Okay. So what you do, you put 350 limit. You understand what I'm saying?
Right, because sometimes it doesn't take the it has to be on a 5 cent. I think I did it one time where it'll say, okay, round it up because we don't take a half of a point or whatever. Yeah.
Okay, so if it doesn't take, what you need to do is just lower the price until it takes.
Okay.
But what I found out that you have a high volume stock like IONQ, other stocks, if you put an order between the bid and the ask, let's say the bid is 350, the ask is 370, you want to get 360, which is $10 more or 10 cents
Right.
more times $110.
What I was
It might,
saying that sometimes when you see that the bid is like 340 and 355, it doesn't let you do the five. It only lets you do a whole number.
right.
Okay.
So in this case, 350 by 370, we put 360.
Right. Okay.
And it might take, my point was, it might take like 20 minutes, so you have to wait.
Mm-hmm.
It's good that you quit your job because now you can focus on this instead of having to work hours and hours for somebody else.
Hours and hours.
All right, so write this down. 360 for the call,
Mm-hmm.
350 for the put.
Mm-hmm.
Total premium is what? 360 plus 350. What do you got?
That's gonna be 410. No,
Um,
that's
you add
that's
them
10.
together.
Yeah, 7. I mean, 1, 2, 3, 6, 7, 710.
Right. $710 coming into your account.
Mm-hmm.
But here's the thing. There's going to be a maintenance, okay, which is how much it costs to do the trade.
Mm-hmm.
So normally, if you're secured, which you don't really want to be secured, it's going to cost you $2,500 because that's what it is to either sell the put or the call. $2,500. Okay.
Mm-hmm.
Now, based on cash covered, I meant to say cash covered. You do the math. 710 divided by 25. Let's do the math. Here's the return on your investment because they're going to hold $2,500 to do that
Mm-hmm.
trade. Okay. So
Okay.
you go 710 divided by 25. 28.4% return. Okay. So that's a 28% return. Now, if you have naked puts and calls, which is really what you need, which is why you want to go to Schwab, but maybe you can do a Robothood also, depending on what level of trading you have. They're only going to require half of that. So even though you're doing both sides, because only one side can get assigned. You're just going to go up for the call or down
Mm-hmm.
down for the put. So they're only charging you for one side. Okay, keep that in mind. Write it down. They're only charging you maintenance for one side. So if you do the put by itself, it's going to be the same cost. If you do the call by itself, it's going to be the same cost. So you might as well do both of them and get two premiums for the maintenance of one. Make sense?
Yes.
Now, back to what I was getting at. If you have not cash covered options, but if you have naked options, they're only going to charge you about half the requirement. So instead of $2,500, they charge you $1,250. $1,250, which is $1,250. Okay, but you're getting 710 back. So let's do the math on that. Okay, which is going to be double what we just did, but 710 divided by 1250. 56% return. This is why the Strangle and the straddle are great strategies. You either be at 28% return or 56% return. Now, here's the issue. You're going to be assigned on the classic straddle. It's either be a call or a put. So if you get assigned on a call, that means it's going to the stocks is going to sell, and you're going to be if write this down. Call assignment. Write down short 100 shares. Okay.
Mm-hmm.
So you're going to end up being, if you don't have 100 shares IONQ, you're gonna have to borrow them, and then they're gonna be short. Okay.
Mm-hmm.
On the put assignment, they're gonna give you 100 shares. So put assignment equals long 100 shares. So if you're under 25, you get $700 for doing this trade. You got 350 from each side. If the stock goes down into the 25 below, you're gonna buy 100 shares at 25, and that means the put gets exercised. The call expires worthless, and then you're gonna have to be on 100 shares of IONQ. If the stock goes down 1 point, then you're gonna lose 100 points of share growth because you got it at 25. It goes down 1 point to 24. You have lost 100 shares. You have lost $100 because you have 100 shares. Does that make sense?
Yes.
But then you add your premium at $700, and you only have $600. You're still at a profit.
Right.
And the break even is if the stock goes down, in this case, 7 points. So if the stock goes from 25 to -7, it's 18. Stock goes to 18, Then you buy your shares at 25 from the put strategy. Now the shares that are 18 is minus 7 points of share growth, minus $700. And you just basically you broke even because you lost 700 points of share growth. You got 7 points of premium. Actually, you got $10 because you got 710, so it's a little more. But basically, it's a wash. And below $18 on the stock come April, you're actually at a loss on the whole. That makes sense?
Mm-hmm.
Same thing with going up. Now, going up, the put will expire worthless. Going up the call, now we're looking at the call. If stock's above 25, you'll be assigned on a call. In this case, you'll be short 100 shares. But, again, you got $700 for the premium. So the break even on the call side is if 25 plus 7, 32. On 32 is where you break even. Anywhere between 25 on the call and 32, you're in profit mode. Anywhere between 25 on the put and 18 on the put, you're in profit mode. But if you go beyond the 32, if it goes beyond 32, then you're going to be at a loss because you shorted the shares at 25 and it went up to 32. Now you're down 7 points on share growth. Then you start losing money as it goes up. And be careful because when you're on naked calls or shorting shares, the stock can go up sometimes a lot, and then you can be at a loss because you're having more share growth loss.
Mm-hmm.
Makes sense?
Yeah.
But here's the thing about the Class 6 straddle and why it's good. Because if you're getting 7 points, Tamara, per month, let's say you do it 10 times a year, that's 70 points a year. The stock generally won't go up 70 points for the whole year.
Mm-hmm.
It might go up 20 points or 30 points.
Mm-hmm.
And then the rest of it is what? Profit.
Mm-hmm.
Now, any questions on that?
Nope.
So you can basically like write both straddle, call, and put, and just roll the dice and then see where the stock ends up every month. You know, it would have to go more than 7 points every month for you to lose money, which is unlikely. Okay, now let me tell you my trade. Okay, or well, let's call this the Godric trade, but it's a strangle, which is you don't write this 25 on both sides because you don't want to get assigned so easily. You want to write like the 20 put for this is for April, which gives you a 5 point buffer. This is the important part I want to get to.
Mm-hmm.
You don't want to just get assigned if IONQ goes below 25 because you will get assigned, and it's kind of like there's no protection, and then you have to buy the shares, and then you have to look at how much income you got. You want to have a nice buffer, so you sell the 20 put. Now, why did I pick the 20 put? Because we know the stock went to like the 17 and bounced up. It has support at 20, correct?
Mm-hmm.
So I feel like I'm happy taking the stock at 20 because it's probably going to stay above 20. That's why. So I'm not going to have I'm thinking it'll go to 10 or 15 is what I'm saying. So 20 is a nice kind of like support level. So you put it to 20 because that's a support level. Okay.
Mm-hmm.
However, you only get $1.20 by $1.31. So you get less money. But let me tell you why this is good. Okay. So let's say we do the limit order between 120 and 130. A limit order is about 125. So right, sell one put, one per contract. We do many contracts.
Mm-hmm.
April 125 limit. Okay. So that's the first trade. And the second trade, we're going to do the call. And I can't show you the call here because it didn't go that high. But we're going to do the call. We're going to do, by the way, how high do you think IONQ can go by next month right now? It's 25 right now. How high do you think it can go? Use your better judgment.
Well, by next month, it's gonna fall.
Yeah, we're doing April. We're doing April.
Okay, it's gonna fall first. So, I would say fall first, back up, fall, back up. You said April?
Yeah, 30 days. 33 days. That's the option. April 17th.
I think it's gonna be recovering from a fall, and it'll probably, I would say 6.
6 points?
Yeah.
So that'd be 31. But here's the thing. You don't want to be so close because we don't actually want to lose money and we don't want to be short the shares that get assigned. So you want to write it to where it won't go that high. Okay. So 6 points would be 30, but that's too close. 35 would be 10 points. We'll probably be pretty safe at the 35, yes?
Yes.
But we can also do the 40 if you want to be real safe. And let me tell you why. But let's just say 35 because you said 6. We're going to move it to 10. I'm going to give you 4 extra points. But let me tell you something. If we're going to make a bet, if IONQ passes 35, you lose the bet, okay?
Okay.
But we're going to just do 35 because you said 6 points. I'm going to give you 10 points. So, sell, write this down. One call, IONQ, 35 strike, April 17th. That gives you 91 by 107. And I'm going to just say limit $1, okay? So put limit order right between the bid and the ask, $1. And then we're getting 125 for the put, for the 20 put. We're getting $1 for the 35 call. Add those together. Add 125 plus 1, and what do you get? 125 plus 1. What do you get?
126.
225
You said 125 plus 1.
plus $1. What you're getting 1 for the call, and you're getting 125 for the put.
Okay.
1.0. You're getting $1 for the call and $1.25 for the put. I said it wrong.
Okay.
So the total is 225. So you're getting 225 premium. You can wrap back this recording if you
Okay.
the file log. But you're right. But I meant $1, not a cent, not
Okay.
a penny. Okay. So you're getting $225 for doing this. This is a strangle. What a strangle is, it's a certain kind of straddle. Okay. A straddle is you're doing the same strike, same date. Strangle is you're gonna go like this. You're gonna tweak it, or like this. And you're selling, right? Not buying, you're selling. That's important. So you're gonna get $225, and we know that they only hold one requirement for one side. So on the cover it's gonna be 2,500, but on the naked it's gonna be 1,250. So whether you have the covered or naked, you still have a good return because look, this is 225. So it's a little bit safer because you're not going to get assigned right away. To get assigned on the call, it has to pass 35. Get assigned on the put, it has to go below 20. You see? And ideally, when you sell a strangle or a straddle, you want to get the premium and walk away. You don't want to really have to deal with shares because then you start getting cumbersome with all these shares. So let's do the math on that. Okay, 225 premium by the requirement of 2,500. $9 return. Okay, which is 9%. That's 9% return a month, 90% return for the year. Not bad.
Not bad.
Now, if it's naked, you said you can do naked on Robinhood, so I'm gonna hold you to it.
I can. And like I was telling you that they call it different. What you're explaining to me is actually the naked, the buying.
Right. So naked is only 1,250 requirement,
Right.
which is half. So we're gonna do 225 divided by 1,250. 18% return.
Right.
This is the real trade you want to do.
Right. I like both.
I want you to test it. I want you to test it on Robinhood. If you can choose naked or covered, do naked because that way you're going to have less requirement. 18% return a month, 180% return for the year. You're going to get literally $225 for selling both sides, 20 into 35, 20 put, 35 call. We're going to hold 1,250 requirement, 18% return. This is the real trade you want to do.
Right.
Now, we can put this on Palantir, Tesla, whatever. But IONQ, I just used it because I know it's a hot stock and they have a high premium. So, however, I know it can go down and up, so there's more volatility. I know that, So, in a blue moon or an off month, you're gonna get a sign. I'll just tell you right now. But month to month, I think you can pick your strangle so you don't get a sign and you get decent premium. Okay.
Yes.
So if you're getting $225, $125 is selling the put, $1 is selling the call, and they're only gonna hold 1,250. That's 18% return, and that's a naked strangle. Write it down. Naked strangle. I don't really trust Robinhood, man. They have different words for stuff. They have colorful screens. They have like Robinhood Gold. They charge you $5 a month. It's like brokers don't do that.
It's confusing because especially when they're adding a margin to your account, you think you're calculating the money correctly, and you've borrowed some money, you have to pay some money back. So really, it's crazy. So I
So
turned
let's
that off. I turned that option off.
so let's put this to the test, okay?
Okay.
How much money do you want to make in 1 month? Just give me a number.
12K.
$12,000, okay?
Okay.
Now, you know that we just did IONQ Strangle. So on
Mm-hmm.
a 20 put for 125. So
Mm-hmm.
on a 35 call for $1. Add both 225. The total requirement on the naked is 1250. So what you do, we look at $12,000 and we know we're getting 225. That's how many contracts do we have to do? 12,000 divided by 225. 53 contracts. 53.3. Let's just say 55, because that way you have extra money to go to dinner. So 55 or 54. Let's say 54. But 55 sounds better. So 55. So watch this. Okay. 55 contracts. That means you'll be selling 55 calls and 55 puts. Requirement is 1250 each one. So now we do the requirement 1250 times 55. This is the money you need. 68,750. 68,750. They're gonna use all that to hold for 55 contracts of the Strangle IONQ, selling 55 puts at 20, selling 55 calls at 35 for April, starting today, and then April, bringing in 225 times 55. This is your income. 12,375. 12,375 income, and that's 18% return. Now, that's how you make 12,000. You make 68,000. You do somewhat of a risky trade. What you might want to do, you might want to actually raise the call to. Let's see, we did 35 call, right?
Yeah, 35. May want to do 40, 45.
Yes. See, now you're thinking. Now, if you do the 40, it's only paying you 47 by 50. Now, this is say 50 cents,
Mm-hmm.
but it's 5 more points of protection that you won't get assigned.
Right.
So the stock can move even higher, and you're still good, but your income will go less.
Mm-hmm.
So you just have, when you write these strangles and straddles, ideally you want to just make it so you don't get assigned. So you want to write the higher call and the lower put,
Mm-hmm.
and ideally you don't put all your money in the same basket. You would do a couple different. You'd like maybe do some Palantir, some Sound, or what other stocks you have.
Palantir, Sound, Rigetti,
I
um,
was just going to say Rigetti.
Rigetti.
Rigetti, Sound, Palantir. Now, those are all high volatile stocks. You know that. So just be
I
careful.
love it. I love it. Mara.
PLTR, Mara, MARA, Rigetti, RGTI, SOUN for Sound. These are
And
all high, hot option stocks, but they're also very volatile stocks.
I have some Verizon.
Does Verizon give you a good cover call?
Um, no, I do it for the dividends.
Nice. What's the symbol V?
VZ.
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 What's the yield?
Huh?
VZ.
Mm-hmm.
What's the yield on the Verizon per year?
Oh, I think it's like 3 or 4. I think.
3 or 4%. Cool. Okay,
But
so we just
look
did an
for
example.
yeah, I look for a dividend and a good PE ratio. So that's what's in my Roth.
Good. Dividends, I like them because they have low drawdowns. So if you have like a dividend stock here, and yeah, over here I have IONQ and pounds here, which will go down in a bad market. Dividend stock will kind of like hold, has what's called low beta, so
Mm-hmm.
it'll hold a little bit better. So like your pound here and IONQ may be down 10% or 20%.
Mm-hmm.
Dividend stock may be down 5 or 8%. That's the difference. That's how I see it. That's my experience. So you'll lose, but you won't lose that much. So it just controls your drawdown. Drawdown meaning the amount of you can lose. The amount your account goes down.
Mm-hmm.
So you can put that straddle to any pound here. You can put it to sound. Mara actually is a good one because Mara, it's really hot because of Bitcoin, but it can't doesn't move that much.
Right.
Mara might be a good start for a straddle because
Rocket.
it did kind of go down because Bitcoin went down, but IONQ went down more. You know,
Right.
IONQ went down from 54 to like 20, or 18 before it bounced back up. So Mara is probably less volatile than IONQ. And if you look at Mara, you can do. Can we look at Mara real quick?
Mm-hmm.
Um, Mara. I'm just looking at April. Now you can go out 2 months if you want, 3 months, get more money. By the way, the Godric trade is to do the leaps. Have you done a leap
Oh,
cover call yet?
I have a leap in on my Roth
What stock?
27. I think it's either it's not Rivian. It may be
Rivian.
I think it's
That that one has a high return on the options.
yeah. Yeah, I be looking to build wealth. But
Are we
yeah,
talking about Mara?
I
Mara
think
goes out 1,000 days, 3 years, right? And if you look at Mara, you buy his stock here at 1318, so you spend 1,300. And it's like you can write the cover call, let's say the 15, which gives you 2 points of share growth, 700 to 795, let's say 750 back. You're getting more than half, more than 50% return
yeah.
on the leap. So, anyways,
I
if
like
you're
I like the leaps for my long-term investment, my
ta
Roths.
take a note on this, the Godric trade, I'm trying to perfect it, but this is a
Okay.
trade. You do the leap, you do the leap on the call, and you do the leap on the put, which is it becomes a strangle. But you do it leap 2 or 3 years out, and then you're getting 7 points for the call. Let's say here, let me see. I wouldn't do the 15. I would go higher. I would go on Mar. I would go 20,
Mm-hmm.
and I get $6.
Okay.
And then the I go lower. I go like the 10. I would go 10 because it'll probably be 10. Bitcoin will be around, I guess. A 10's paying 450 by 465. So 450 on the 10 and 6 on the 20. And I can always make the 20 higher. 22 is paying 5. 25 is also paying 5. So what the hell? 25. I'll be between a 25 and a 10 on the leap, both call and put, which is a Godric trade. I'm getting $5 for the 25. I'm getting for the 10. I'm getting 450.
Yeah.
Let's do the math on that. 450
Mm-hmm.
plus $5. I'm getting 950, and the stock is only $13. So
Right.
the return on that, and they're only holding half.
Right.
So let me see, 13, 18. So let's do 13, 18. This is your required. This is your maintenance requirement, okay? Because it's half of. That's the full amount actually. 1318 is the full amount, okay?
Mm-hmm.
If you bought cash for a Mars stock, but since your margin account, they're going to hold half. So divide by two. Here's the margin of this trade. This is what they're really going to hold when you do this trade. 659. But you're going to get 450 for selling the ten leap put minus 450. Now here's the requirement now, and then you're going to get 500 for selling the 20 cover call. So you're at a net profit of 291. So it's a free trade when you sell both sides.
Mm-hmm.
You're actually going to add buying power to your account, and when you do the trade, you're going to see the buying power increase. You won't see the balance increase because the balance you're going to have two short calls, a put short and a call short. Only one of them can really get assigned. But once these calls fall off after 3 years, you're going to have the full benefit of the in this case $950, and it's going to be a return of, let's see, 659. Sorry, 950. Which is your income on both sides. Currently, both sides 950. Divided by your investment of 659. 144% return.
That sounds good.
And what? Yes, it's a 3-year trade, but here's the thing: you're not stuck for 3 years because you're going to basically get this money in 950, which your buying power increases by 950. Take the 950, put it per contract. By the way, you can do two contracts, 3 contracts, 10 contracts, but take 950 per contract, put it in another stock that you're going to stack for 3 years. Let's say Rigetti. Can we do Rigetti?
Yes.
Let's do that. Rigetti, I think, is around $9. I'll pull it up. Rigetti, RGTI. 11, almost. I think D-Wave is $9, but let's just do Rigetti because I just pulled it up. 11.22. Well, hey, 950 cash. You can do Rigetti at 11, just barely beat the margin, correct? So it can actually fit, just slight margin, okay? So on the Rigetti, you're gonna get, you're gonna spend $1,100. So you get like $200 in margin, less actually, because $950 for the premium for the Godric Trade, and then you're gonna write the cover call for April. And if you have, it's 11.22 for the stock. Should we write the 12 or the 13? 12 is paying 169. 13 is paying 119.
If I think it's going up,
yeah,
I want the 11. But if I think it's going down, I want it.
The 14 is paying $1. Like the 14 is paying $1.05. The 13 is paying $1.19. 12 is paying $1.69. The 11, which is in the money, is paying $1.89. Which one do you want to do?
Up
Doesn't
one.
matter.
Yeah, not
so 12 or what?
Yeah.
Let's say we do 12. It's 169. Now watch this. Sell 112 CC. Buy 100 shares with the premium we got for the Mara, and it's 169, which is $169 per month. Okay, and this money's gotten from the Strangle leap. 169 times. Let's just say times 10 because we only need to do 10 a year, and it's 1,000 days, which is December 2027. So that gives us, let me just say a month is 30 days. 1,000 divided by 30. I get 33 months. Let's just say 30, okay? So 3 years is 30 cover calls times 169. 169 times 30. This is what you're getting, $5,000 from a $690 investment. You're getting $950 one time. You're reinvesting that and getting $5,000 from that. That is stacking. So I don't know if I do the math on that. It's like pays for itself. Am I right? You're gonna get a monthly on the Rigetti of $169 a month per contract. It's giving you $5,000 after 3 years, and one trade basically pays for itself and pays for the next trade. That's how I look at it. Strategy, stacking. You have to really do the trade to get the benefit. We talk about it, but unless you really do it, questions. We talked about the straddle, the strangle. Definitely put one or two of these trades in to get the benefit, to see how it works, and if and then yes, move over to Schwab. You'll see it's a little bit more professional. I can call the broker at Schwab, and they have what's called the trading desk right now. Trading desk. The trading desk has brokers there sitting there, going to help the clients with their trades, help them get the benefit of explaining everything to them, walk them out of an issue without a problem in their account. They want to straddle, strangle, something's going on. A real person to handle real trades. Matter of fact, I called them Thursday actually, because I put a check in, and then only half went to cash and half went to margin. So I asked them, just put the whole thing to cash so I can do an option trade. And they did it for me. So they can move around numbers at your request. Whereas Robothood, I know they won't do that. Robothood gives you text messages and they give you the textbook answer.
That's why I was telling you earlier that I changed that margin option on there to fit me, because trying to reach somebody is hard.
And you'll get the benefit of Schwab by calling them and asking them, talking to them, and they can walk you through the trade and make sure that your percentages are right, your margins right, your trades right. And they don't all. I mean, most of them are good. Some of them are like new, so you'll know they kind of give you the textbook answers, but some of them are really experienced and they can actually help you a lot.
Mm-hmm.
So yes, you definitely want to start moving over to Schwab. But I'm not saying cancel Robinhood completely, but you'll have a lot of benefits of Schwab. Questions?
Nope.
Can we look at your core 10?
My who?
Your core 10 stocks. I'll list them out.
Okay. Let me
Do you remember what they are?
uh let me look, let me pull them up.
I know one's Palantir, PLTR.
Um,
You still have IONQ?
oh no, I didn't sold that out.
I'm back on IONQ, so I never sold. Because why? Because I was getting like 9% a month, so I'm just
Mhm.
going long term. I'm just doing monthly.
Okay.
Are you in Rigetti?
So I got, let's see. So I have different watch lists for different things. So
But no. We have to focus.
right.
10 stocks that you're gonna get behind, not different watch lists. Just one list of 10. You can have other lists, but these 10 you're gonna live and die by. This is your retirement.
Okay. So
What are the stocks?
well
Just give me what you got. We'll work
okay.
with it.
So I got Palo Alto, VOO,
Hang on.
PAN,
PANW.
mm-hmm.
Okay.
VOO.
VOO.
Mm-hmm. I'm looking at that. Um
Palantir is the one. PLTR. Okay, that's the third. That's three.
Palo Alto. Okay, I have VOO. I'm looking at Airbnb.
The symbol on that.
What else I got?
What's
MSTY.
what's the symbol on Airbnb?
Oh, Airbnb. ABNB.
BNB.
ABNB. Mhm.
Okay.
MSTY.
MSTY. What is that?
That's a ETF.
Okay.
High yield ETF. Let's see. And
What's
then
what's the yield?
let me go back to it. Hold on.
Here, let me pull it up. You don't know?
Not off the bat. It's
You better do your
point,
research.
yeah,
You're independent now.
point 21. That's a what yield is that? 30-day yield? Point 20, 0.21%. So I see the P ratios down, so I won't be investing in that. So I kind of look at my stocks of what's in the news, what's growing, what's not growing, what the movement is.
The yield I have 79%. That can't be right.
Let me see. That's what it say on here on
I think I know why. Because it went from 45 to 20. But we'll put it. We'll look into that more.
okay, I'm looking
Number.
at PayPal.
I need five more stocks.
PayPal is the one I'm looking at as well. So those are
PYPL.
mm-hmm. Now the ones that I'm actively trading now are I invested a little bit into TNXP, but that's just something I invested in.
No,
Rocket
we
Lab.
want PayPal is PYPL. We want your not something you invested in. We want
Okay.
your
Rocket
core, your hardcore test stock that you live and die by.
Rocket Lab, Mara, and QBTS. Mm-hmm.
RKLBMARAQTBS.
Mm-hmm.
No, I think that's D Wave.
Yeah.
Quantum
And
computers.
Palantir. You got Palantir on there?
Yeah, that only gives you 9, dear.
Okay. And the last
Quantum D Wave QBTS is 1015.
okay, and I'm doing let me
This is what I got. I got Palantir, Palo Alto, VOO, Airbnb, Misty, PayPal, Rocket Labs, Mara, QBTS is one more. You need one more. It should be a dividend stock, honestly. You need
I'm
dividend. You
looking
need low drawdown.
I'm looking at MO.
Let's just put in the MO because that one is a high 7% yield, and I'll keep you out of trouble. And you don't really got to sell it; just keep it. And maybe if you have Misty and MO, you'll have a decent dividend. I recommend you just put,
And I did
10, 25% in there, and then
I
the rest
forgot
of
about
them.
this one. This is my trade on ZI. I did trades on that. I did.
ZI.
It's kind of it doesn't have a lot of volatility, but it's local, so I know kind of what's going on here in Seattle.
Did you say Zebra Ingrid? ZI?
ZI.
Not familiar with that one. Let me put it in there. Zoom Info Technology.
Yeah, that's local.
A lot of volume. It's showing a PE of 130.
Yep.
The 10-year chart is there. A second. I have a chart from 2021. It was 79, and now it's 10. Do you know it went down from 79? I hope it bounces
It
back
went
for you.
down from 79.
I'll put that as number 11. ZI.
Yeah.
But
Now, I bet it the other week that it was at 10 the other week, and I bet it was going to 12, and it did. So I made some moolah that week.
Okay. However, congratulations. However, you want to cut your list down to 10 because I want to focus. Okay.
Okay.
And if you're going to do research, I already do it on 10 stocks efficiently. Then a bunch of other stocks not really have enough time or effort to do the research. So, can I give you some homework?
Yes.
Cut this list down to 10.
Okay.
Not that it's illegal to trade other stocks, but you want to just focus on 10. That's going to get you focused and efficient on these 10 stocks. And I'm going to definitely keep Misty and MO for your dividends. I don't know about Misty, but if you want to replace it. I was looking at, hey, Hershey's is a nice dividend stock. HSY. Write it down, HSY.
Okay, Hershey.
Okay, now, questions.
Nope.
We talked about straddle, strangles, talk about elite, Godric Trade, talk about returns on IONQ on the straddle. Maybe you want to fit IONQ back in your core 10 if you like it. But if you have 68K, you could technically get 12K a month on an IONQ straddle or a similar stock, Qubit, different stock. Ideally, a better stock or equally good. And maybe even break it into 3 different trades. That way you don't put all your money in one basket. I don't want you to do that. That's just on paper example, okay? But we did some high level trades today, and got your core 10. Though you're working on it, it's almost there, pretty much.
Yeah, it's almost there. It's almost tweaked.
You understand? You're moving the Schwab with your account. You're have the benefit of level 3 trading in Robinhood. You know kind of what you're doing. You quit your job. Congratulations again. I think the threshold going from working for somebody else, independent, going over through this threshold is paying your bills with your account. That's the difference. You have a phone bill. By the way, when you get your Schwab account, ask for free check writing. That's in your book of checks. And a couple of things are good for you. You can pay with checks, but also on the phone, like I pay my wire power bill, I call up and I just give my check number. It takes like 3 days for them to clear the check, but I pay my bill, hits my account. I know it'll either go out of my margin or out of my cash. If I used up all my buying power, it'll clear to my margin. If I have buying power, cash, it'll clear to my cash. Once you start paying your bills, that's being self-sufficient. And you see your account go down, let's say $200 for paying your bill, and now that forces your hand to be like, you know what? That money just came out of my account. I gotta do the next trade right. It makes you focus. It makes you work harder. Just think if you put 8 hours every day into your business, as opposed to giving it to somebody else. what would your
Oh,
results be?
I'll be a millionaire.
I'm going to end it with this. You will be a millionaire. One great economist once said, the currency of the poor is debt. Poor people are always in debt. They got the car finance, house finance, everything. They got to pay monthly. Everything is on credit cards. They're paid interest on debt. They're stuck. The currency of the common worker or the laborer is labor. Or, sorry, I said that wrong. Currency of the middle class is labor. They exchange their hours for dollars. They're working for a job. They can only work so much. They're kind of capped in that way. They don't have so many hours. They can have a decent living, but they got to keep working to get the money. They're stuck in their job. Okay. And the currency of the rich is gold. And gold means assets. And assets means you can write it down, leverage. Meaning you can buy real estate, buy an apartment, rent out the rooms. Get what? Passive income every month. Rent out the rooms, real estate. Buy stocks, write cover calls, income every month, passive income. Yes, there's a fluctuation in the stock price, but the income is still there. Similar to the real estate. Work on that. You're there, and you know how to do that, correct?
Yes.
As straddles, as strangles, increase the return, but also increase the
I've
risk. So be
I've
careful.
bought real estate with some of my returns already.
Yes. Let's talk about that
Next
next
time.
time. And the other way you can leverage is you can leverage people. You can employ people as employees. We just talked about that. Have them work for you. They do the service or product and make the money. You give them a percentage for their time, and they give you a profit.
Mm-hmm.
If you look at somebody that works at McDonald's as a supervisor, he may have 9 people under him as a supervisor at McDonald's. He's leveraging 9 people. He gets, I don't know, 30K, 40K. But look at Jeff Bezos, who has 2 million employees from Amazon. He's leveraging 2 million people. And he has like 200 billion. That's the difference. Leverage. You're leveraging passive income. You're leveraging real estate, employees, do a business, and investment stocks, options, cover calls, naked puts. Poor is in debt. Middle class is working for a living. The rich is getting paid passive income through investments.
Mm-hmm.
That's it.
That's it.
Is there something else? Thank you, dear. Let's call it a win.
Okay. A win is a win.
Text me for the next one.
Okay.
Appreciate you. I'm going to send you this right when I get it.
Okay.